Welcome to Samba Samba. Enjoy the video.
Start by pulling the accounts that feed the income statement, revenue and expense ledgers, plus the trial balance. You need accurate totals so the statement balances. Errors here ripple forward. Once you have month or quarter totals, separate operating from non-operating items to clarify earnings. Make sure to reconcile bank and credit records now to catch missing transactions, because correcting them later is harder. This first pass creates the raw numbers you'll format into the income statement. Now lay out the statement. Put net revenue at the top, then subtract COGS to compute gross profit. Once done, list operating expenses, payroll, rent, marketing, grouped by category for clarity. Calculate operating income by subtracting total operating expenses from gross profit. This shows core business performance. Next, include non-operating items like interest and taxes to reach net income. Make sure to show subtotals and use consistent periods so comparisons are meaningful. And finish by adding taxes, interest, and any extraordinary items to arrive at net income. Once done, reconcile net income to retained earnings and cross-check key totals against the trial balance and cash flow statement to ensure consistency. If numbers don't match, review accruals, unrecorded invoices, or misclassified accounts. A common troubleshooting tip: if totals differ, reconcile one account at a time starting with revenue, since mismatched revenue entries often cause the largest variances. Document any corrections clearly.
Thanks for watching. Consider subscribing if we helped you.